Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
Palantir, the AI operating system, continues to destroy expectations. This article was written by Andres Cardenal, CFA. Summary. Pause. Palantir Technologies, Inc. delivered a standout Q4 2025, surpassing expectations and cementing its role as the AI operating system for enterprises. PLTR guided to 61% revenue growth for 2026, far outpacing Wall Street's 43% projection, with U.S. commercial revenue up 137%. Despite a demanding valuation, approximately 48 times next year's revenue, PLTR's rapid growth and execution shift its multiples from extreme to demanding but not crazy. Valuation risk remains, but accelerating fundamentals and rising long-term earnings estimates support continued upside for PLTR stock as AI adoption becomes critical. I am Andres Cardenal, CFA. I run the investing group The Data-Driven Investor, where I share tech and AI-driven stock, ETF, and options ideas with a focus on risk management. Palantir Technologies, Inc., PLTR, delivered another exceptional quarter, proving to the market that the company is one of a kind. Importantly, Palantir is showing that it is not just another software business, but the operating system for AI. This radically changes the assumptions for Palantir going forward. The biggest bearish argument against Palantir is the valuation, which is highly demanding from all angles. With this kind of performance, however, the valuation is changing from extreme to demanding but not crazy. The context: it is nothing new to see Palantir outperforming expectations. The company has an excellent track record in this regard, as shown in the chart comparing revenue estimates and actual reported numbers. The main headwind for the investment thesis is the valuation. The stock is trading at nearly 48 times next year's revenue estimates. This makes Palantir one of the most expensive stocks in the market based on these kinds of ratios. However, the true value of a business depends on its long-term cash flow generation, not on a single metric based on current numbers. If the company is outperforming expectations and accelerating over time, the valuation ratios need to be analyzed with a much broader and more comprehensive perspective. My prior article on Palantir is entitled Palantir, It's Not Too Late to Buy the Stock. And the main thesis in such an article is that static valuation ratios do not show the whole story when a company is delivering outstanding performance and consistently destroying Wall Street expectations. From such an article, Palantir is a distinctive business with a privileged position at the epicenter of the AI revolution. Financial performance is exceptional, and long-term earnings projections are rising at full speed. Yes, the valuation ratios look exorbitant, but this does not mean that the stock is overvalued based on long-term earnings potential and qualitative fundamentals. Looking at the most recent report from Palantir, the thesis is gaining strength as the business is accelerating and comfortably surpassing expectations. Besides, and from a qualitative perspective, Palantir is validating its unique position as the AI operating system for both the public sector and leading corporations. As crazy as it may seem, given how much the stock has appreciated in recent years, Palantir still has plenty of room for gains in the years ahead. The quarter. All the company's numbers came in materially ahead of expectations during the fourth quarter of 2025. The main point is that the company is guiding to revenue growth of 61% in 2026, while Wall Street was projecting 43% at the time of the report. When a company can destroy expectations by such a large degree, it clearly shows that backward-looking valuation ratios are underestimating the true value of the business. The market was expecting a deceleration, yet Palantir continues to gain speed, so this clearly calls for a recalibration of expectations. U.S. revenue grew 93% during the quarter, with U.S. commercial revenue growing 137%. U.S. government revenue was also ahead of expectations, growing 66% versus the same quarter in the prior year. Europe is falling materially behind the U.S. in AI adoption, and it is hard to imagine that this will remain the case indefinitely. Businesses all over the world are soon going to understand that adopting AI is a matter of survival, and it is encouraging to know that Palantir still has ample room for international expansion. Operating profit margin reached 57% during the quarter, widely exceeding guidance and Wall Street estimates. The Rule of 40 says that a high-quality software company should be above 40% when considering revenue growth and profit margins together. Palantir is in its own league at 127%. The AI operating system, Palantir is proving to the market that it is the AI operating system, not just another software company. Management shared this comment from Thomas Cavanaugh Construction during the conference call. We've gone all in, so much so that every other software must justify its existence. And so far, they haven't been able to. 97% of our employees use Foundry every day. Foundry is our operating system. The ontology is the secret weapon. Nothing else comes close. And not only are we getting rid of third-party software, but we've replaced their functionality and then beaten them to new features all within the year because of the ontology. From a big-picture perspective, management believes AI will create more jobs than destroy them, as not crazy. If the stock pulls back due to market conditions or any other factor unrelated to the business fundamentals, it can be easier for institutions to buy the dip after this most recent quarter, as Palantir is clearly proving that fundamental quality and ability to execute are exceptional. Looking at early Wall Street reactions to earnings, Baird upgraded Palantir to outperform with a $200 price target. Wedbush is keeping the outperform rating with a price target of $230. But deservedly so. This article was written.
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.